Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Tyler Cauble. Thanks for being on the show, Tyler.
Hey, good morning, Whitney. Thank you so much for having me.
Yeah, I appreciate you. And I'm just reading through your bio. I'm excited to get into your story. And I know the listeners are going to learn a lot from you and from what you've accomplished. And but before we get into Tyler, I want to remind everybody to go to the Facebook group, the Real Estate Syndication Show, so we can all learn from experts like Tyler and get connected there and meet other people in your local community that's also pursuing the syndication business. And then also go to Life Bridge Capital, where you can connect with me. And but Tyler Cauble started in commercial real estate 6 years ago as an office retail leasing agent, became the best-selling author on leasing commercial real estate in February of 2018 with the book Open for Business, The Insider's Guide to Leasing Commercial Real Estate. In June of 2019, he completed his first syndication of a 12,000 square foot office building in South Nashville. So Tyler, welcome to the show. I'm excited to get into your story and this journey to syndication and getting that first deal, that first syndication done. And so, give us a little more details about, what you were doing in this. I know you were, you're on the leasing side and leasing side of the retail business, and then you got your first deal done. So give us a little more of those details.
Absolutely. Well, Whitney, first of all, thank you so much for having me. Really excited to be on the show. But yeah, I got started about 6 years ago in commercial real estate as an in-house leasing agent, as you said. And 6 years ago, the market was very different. So I had a shopping center and an office building that were both about 40% vacant. So when I first got started, I had a lot of work to do. About 2 years into that, I stabilized those properties and realized that if I didn't find something else to do, I was not going to be making that much money that year. So I was working with a boutique development firm at the time, and they were building probably about 1,000 townhomes, either under construction and permitting or in planning by the time I left. So I was just watching them develop these townhomes. And so I went and put my first development deal together, which was 42 townhomes in Bellevue, which is just southwest of Nashville, and worked on that for a little bit. And I also started taking on third-party work. So helping tenants lease space, helping investors start to buy space. And that's where I really started learning how the investing process works. Because being on the leasing side, you didn't really see a whole lot of that. So after I launched my book, I decided to start my own company. I left and started working with investors and businesses, either looking to maximize their investments by keeping them leased up or managed properly, or just expand their portfolios. So I actually, it's funny, the first building I bought, I had two clients that had it under contract, and they both ended up backing out. I said, you know what, this is too good of a deal. I'm going to figure out how to do it. So I grabbed a couple of investors. I said, hey, look, here's what I want to do with this property. Do you guys want to do this with me? And they said, absolutely. I came out of pocket nothing on that first deal. I actually rolled my commission in as equity into the investment, and then took an additional percentage for being the asset manager. And that was my first real estate deal. So that was really exciting to be buying an office building, as a 26-year-old with no money out of pocket. But in the meantime, I had actually a couple of years ago got involved with a group called GoBundance. It's a men's networking group. And
So before we talk about GoBundance, I wanted to ask you. So you had two investors on that deal? Is that right?
That's right. Yes, sir.
Okay. So how did you build credibility with them to go in? This is your first time doing this. How did you build credibility with those investors?
Absolutely. Well, so I had known both of them for a couple of years at that point, and they had seen what I was doing on the leasing side. I went and branded my company very differently from most commercial real estate brokerages. We're very digital. We're very online. We're very modern. And they liked what I was doing.
Give me a couple of, so I like what you said there, that, that you've known them for a couple of years, you've been developing that relationship, because I get this question all the time, about, how do you get the credibility? Where do we meet the investors? And a lot of times I say, you've already been building your credibility, I hope,
right.
and you probably already know some of your future investors, but how did you, tell me how, you mentioned you branded yourself differently. Can you give me a couple of examples?
Yeah, absolutely. So we're really big on Instagram. So I get probably 20% of our business through Instagram every year. We're actually working on a $6 million deal because of it right now. They came 100% through that. So
Now,
that
the deal
certainly,
or the investors came through there?
the deal came through there. The
Wow.
deal came through there. Yeah, because I have about 12,000 followers on Instagram, and so people just reach out to me and will send me deals kind of all the time, which is wild. But with those investors, I've known them for a couple of years. They'd seen what I was doing, and they knew that I was a stand up guy. I mean, I was the kind of guy that, and that's super important when you're starting out. It's like, look, you guys are taking a chance on me, and because of that, I'm really going to reward you with the lion's share of this deal. But I want you to understand that if anything ever goes wrong with it, I will be out there 24/7 making sure that, at the very least, we get your money back. So they
Yeah.
trusted me.
That's awesome. No, that's awesome. I mean, you had that kind of relationship before you went into that deal, and then now how you performed on this deal, I'm sure has just pushed you that much forward or further, with these investors.
Exactly. I mean, you got to get that first deal done, right? And you got to be willing to. I mean, like I said, they took the lion's share, and I was okay with that because I got the experience. It's more than worth it. Well, now that we've had a very successful deal, they've referred me to their friends, who, once you start getting those referrals from an investor who has had a successful deal, it's a much easier sell because people call you and they go, "Hey, I want to invest in your next project," and you don't even have to approach them.
So can you tell me, tell me something that you learned from that deal that was like maybe eye-opening to an extent, or something that's like helped you moving forward?
I would say that raising money is easier and harder than you think it ever is going to be. Those two, it was a smaller deal. I only had to raise a little over $100,000 for it. So, I just picked up the phone, called these guys, kind of told them what I wanted to do, and that, it happened. So, and I think it's because, again, I had built up that relationship over a few years. When we went and syndicated our office building, that was a little more difficult. They were, again, guys that we had built relationships with over the last few years, but I had to raise several $100,000 instead, almost just under 400. So that's just kind of a different animal once you get to that point.
So I'd interrupted you a minute ago, and you were talking about we were talking about brand being branded different, Instagram, and some of that. But you had also mentioned GoBundance, and
That's
we were
right.
going to come back to that.
Yes. So there's a number of guys in GoBundance that are apartment syndicators. I'd actually never heard of syndication. Probably 3 years into the business, I didn't know what it was. I was like, wait, so these guys are putting deals together, and they're just getting money for doing it, and taking all these fees everywhere. And I was like, this is amazing. So actually, Bruce Peterson, who ended up becoming one of my partners, he owns about 1,000 doors down in Austin, Texas. He kind of took me under his wing and just started teaching me how syndication works. And so, now he and I are partnered, and we're looking at doing some more deals. But that's really what it was. I got involved in GoBundance and got it, started meeting a bunch of people that had been doing apartment syndications, and they were more than willing to teach me.
So Tim Rode, I just interviewed also, and it's awesome, the connection now. And Bruce has also been on the show, by the way. So to him, we said hello. But
I will.
So what's happened? So that from the first deal, lead me into your first syndication.
So I had found this apartment building in South Nashville that I thought was completely underutilized. They were asking way too much for it, in my opinion. So it had been sitting vacant. It was a 2-story, 12,000 square foot office building. It just looked like it was straight out of 1985. They hadn't really touched anything. I mean, the interiors, the carpet was still that plush, like blue-green carpet, your grandparents had. So the owner of that building, his company had occupied that building. And so when he passed away, the family sold it. It was 90% vacant. So, we were just looking at this. And I said, I think that there is a move on this building for affordable office space in Nashville, which there almost is none. We've got one of the largest spec office pipelines in the country. And because of that, it's all Class A. So it's over $35, $40 a foot, which is just crazy. I mean, small business owners can't afford that. So my thesis going into this was, I think that we can get this at such a low price and renovate it for such a low price that we can provide affordable office space, lease this up, refinance it, move on to the next one.
Now you had said that it was overpriced, but you think that you could get a really good deal on it. Why was that?
That's right. Well, so I knew I had a good relationship with the broker, and just based on how long it had been sitting on the market and my continued conversations with him, I mean, I went and sat down with him and the seller personally and just kind of, kept talking about it. And they came back and they just wanted too much. And I said, you know what, I'm just going to let this one sit. Luckily it was December. So I had, zero anxiety that this deal was going to be gone by the time January came around. And that's kind of exactly what happened. I got a little lucky. I came back. They were asking 1.3 million. And after Christmas, they were like, you know what, we're kind of just done with this property. And so I made them an offer of, 900. We settled at 980. And so I ended up getting the office building for about $81 a foot, which in Nashville, just to build new construction is $130 a foot. And that's not including the dirt. So we got a phenomenal deal on it.
Nice. Okay. So challenge then, you had to do some remodeling, I guess, or updating, right? And then get it leased up. But what was the challenges? Or let's back up a little bit, getting to the closing table, any challenges there?
Oh, absolutely. We had one of our investors went rogue and decided to, because he knew a couple of the other investors. So he decided to just try and ruin the deal. So he pulled his money out and then approached a couple of other investors and got them to pull their money out. And we had a phone call with him, couldn't get him to understand. He was a big residential guy. He'd never done commercial, so he just didn't understand it. So 4 days before closing, I had to go raise another $150,000, which we made it happen. Luckily, I had I guess I just got really lucky again. Had one guy kind of approach us out of the woodworks with two of his buddies that wanted to invest in the deal. And so that saved us. But yes, we definitely had some fun getting to the closing table.
Anything particular you did to get that 150 raised, 3 days before closing?
So I'm a board member for the Real Estate Investors of Nashville. So, I think that being involved in that group, people do see me as being credible. I just kind of had kept talking about it, in all of our meetings. And then they eventually approached me and I was like, once you're in a position of authority like that, especially in a nonprofit, you're likely not going to be a fly by the night kind of guy, which I'm not. I mean, I'm from Nashville. And so I'm not planning on going anywhere. So I think that was a huge part of it, of them going, hey, look, we're taking a chance on you since this is your first syndication, but you really know what you're doing and we love what you're doing. So I think that's really, really all it was. I mean, the returns are insane, and we had to keep beating up the deal and beating up the deal. We're like, no one's going to believe us. It's going to look really bad. So, when we kind of put together our conservative baseline and aggressive projections on it, they were easily sold.
So, elaborate on that a little bit, because we've had to do that. And as far as beating up the deal, like you mentioned, because the returns are showing, so good that if you present that, investors, wait a minute, right? They're going to get that feeling that this isn't real. So tell me a little about that, or elaborate.
Exactly. I mean, investors will immediately assume, okay, either this guy has completely missed something in his underwriting, or he doesn't know what he's doing, or both, all the above. So we just kind of kept lowering our rate on the rents. We kept increasing our operating expenses. We kept increasing, the amount of time it would take to stabilize the property. So, one, we're giving ourselves plenty of runway so that if the deal does end up hitting, the market falls out, we still have plenty of time, built into making the project work. But yeah, I mean, when I first ran the numbers and I showed it to my partner, I actually was thinking that he would just invest in it at first when I approached it, because he's syndicated 2,700 units. So I said, hey, look, I'm thinking of doing my first syndication. What do you think of this deal? And he underwrote it on his own. He's got a whole team. He goes, I'm partnered with you on this deal. Okay. That certainly helps bring me credibility. So I'm okay with that.
Nice. That gave you confidence as well, I'm sure.
Absolutely.
And so tell me about your team there, though. How did you know this partner? And because a lot of people getting started, they need a partner like that. I know. I mean, I welcome to partner. Once I found somebody I felt like was somebody that I wanted to partner with. But the team is so important, right? So tell me about your team and how you knew this partner.
Absolutely. That's crucial. So my partner, he's in his mid-30s. He got started kind of buying duplexes here and there. And then I think he'd amassed about 80 units when somebody approached him and said, "Hey, I've got this 1,200 unit portfolio. Do you want to buy it?" It was one of those moments where, you're just like, yeah, we can do that, when he'd never done it before. And so he just hit the ground running and busted it and ended up buying this portfolio. It was in Knoxville, I think some in Kentucky, some here in Nashville. And he's just grown his portfolio through that ever since. So he's incredibly personal, which, of course you would have to be in order to raise that much money. I think that it was a $20 million deal. $20 million
price?
capital raise.
Capital raise. Yeah.
So, I mean, that's a little bit of money. I mean, it's funny when I approached him about this deal, he was like, "Yeah, I can make a phone call and raise this cash for you in 17 minutes." I said, "That's great. Let me do it. I want to learn. If we mess up, I'll have you make a phone call." But, so I met him through the Entrepreneurs Organization. Nashville actually has one of the largest chapters of EO in the country. And it's for business owners to get together and network, share best practices, learn. And he and I went through a class called Catalyst, which is actually where we came up with the name Catalyst Capital, which is what we started that company under. So that's how I met him through there. And then, on my team, I've got a leasing brokerage and a property management company. So that was kind of the sweat equity side of it that I brought to it. Was, hey, look, we can run the property. You just help me set up the syndication. That, which made it really worth it for him, because I mean, he's managing a 2,700 unit apartment portfolio. He couldn't really care less about, a small 12,000 square foot office building if he's going to have to be in there working on it every day. So that was kind of the value that I brought on that side.
Nice. Okay. So you got the deal closed, and then what happened?
We did. So we immediately started renovations. We actually had a tenant that was already lined up to lease one of the spaces. And they were very gracious in working with us, because we had to get in there and, completely redo the bathrooms, redo the kitchen, redo the flooring, paint. So we had to kind of shuffle them around the office building for a little bit. But, they kind of took us on our word of what the space was going to look like. I mean, the building looks completely different now. But yeah, so we're kind of doing the finishing touches. We hit a couple bumps in the renovation. One of our project managers ended up getting really sick, part way through it. So that really slowed things down, and I kind of had to jump back in and take over it. But now we're just working on leasing it up.
Nice. Okay. So what's the long-term business plan for this property?
So since my partner and I are both Nashville guys, we want to be here for the rest of our lives. We want to hold on to these properties for as long as we can, because we know where this city's going. I mean, I always say we're like Atlanta in the 1980s. Yeah, sure, maybe it was expensive then, but oh my gosh, if you had bought in 1980 in Atlanta, you'd be doing fine now. So we're working to stabilize it by year 3. We'll refinance, pull out all of our cash tax-free, and go do the next project. Just let that project kind of run itself.
Nice. Okay. So you'll refi, then you'll just hold it and keep the property.
That's right. So basically I guess the approach that we're doing is a commercial BRRRR, the buy, rehab, refinance, and repeat.
So what about the investors on that deal? Are they going to be in the deal forever then, or they understand that, or will you buy them out when you refi?
Yeah. So in the future, we'll probably be buying our investors out. Since these guys were taking a chance with us, we said, look, we're going to refinance, give you 100% of your initial investment back, plus all the returns that we get the 3 years leading up to that. And then you'll just stay in perpetuity. So the way that we set it up, we did a 70-30 GP split. And after we return 100% of the capital, that actually flips. So the GP will get 70, the LP will get 30. But they also have zero capital left in, and they've already gotten their gains. So I mean, we're projecting over that first 3 years, actually 7 years, is how we underwrote it, a 46% IRR because of that. because they essentially have zero money left in the deal.
Right. Okay. So that probably gave them some assurance too. Okay. We're going to do a refi. We're going to get our capital back in year 3. But then let's see. So then you said it changes from 70/30 to 30/70. And
That's
then
right.
so they have their capital back, but then you're going to continue to pay them.
Exactly. They've gotten everything returned. They've already gotten, we had an 8% pref for the first 2 years because we knew that we wouldn't be stabilized since the property was 90% vacant. So they're going to get that 8% pref, and plus any, major returns in the first 3 years. And then we return their capital in a capital event, and the GPLP split flips.
Okay. So, since you wrote the book on it, give us a couple points on, getting office space, retail space leased up.
Yeah. So I think the most important thing when going through that process is to have a team. I mean, it's just like syndicating. You have to have a team of individuals that are helping you do it all. So, you need to have a solid a leasing brokerage. I mean, I would certainly go look for a group that has a lot of other office listings kind of in that area, or whatever kind of listings in that area. If you're doing retail or industrial, because they are going to be very knowledgeable. And not only that, they've already got their marketing in full swing on those properties. Any prospects that don't fit that property could be a fit for yours. So there's a lot of synergy in that. I would say make sure you have a really good attorney on your side. I can't tell you how many times I've seen landlords just Frankenstein contracts, leasing contracts off of stuff they found online. And that is such a nightmare. But make sure the space is presentable and it shows well, and offer modern amenities where you can. We actually budgeted, I think, $50,000 to do some storefront doors because we have ground floor units that have their own doors. Well, we were kind of looking at it. We said, why would anybody really want doors like that? We decided to switch it up, go with a single door with 2 side lights, and which cost us $10,000 for those same doors. So we said, well, we've got a lot of extra money in the budget. Let's give them a high-end Bluetooth enabled keypad so that they can open their door, and a Ring camera. So, they can let employees in, they could let clients in. I mean, we just made it kind of modernized. So I think that any little amenities that you can do that don't cost a whole lot, that make you stand out to the competition, do it. The other thing too, when it comes to leasing, don't go for the maximum amount rate that you think that you can. I mean, here in this case, we wanted to provide affordable office space. So to us, I mean, again, our projections are so high, we could cut our rents significantly and lease it up faster, refinance faster, move on to the next project faster. And once the property's stabilized, start to increase those rates. I see too many people go for, the maximum amount of rent in that market, and it just sits vacant for 6, 9, 12 months. And that hurts your returns. So that's definitely a few tips right there.
No, that's really good. Don't go for the max. Get it rented, get it stabilized, get it leased up, and then gradually increase over time. I think it's smart. Exactly. It's a much better long-term play. So, through this process, what's been the hardest part of the syndication process or journey for you up to this point?
I would say, raising capital. I'm sure everybody kind of says that. I'm the technician, right? Like, it's very easy. I've for the last 6 years, I've found properties, leased properties, and managed properties. Been doing that for a long time, but I haven't raised capital before. Until this past year. So, that was a new skill set for me that I've really had to start learning, start being conscious about, when I'm talking to people, just saying, hey, by the way, when someone asks what you do, I don't say I'm in commercial real estate anymore. I say, hey, look, I put money together. I bring investors together to help them invest in real estate and get, 10+% cash on cash returns. Well, kind of whatever, something like that, so that it just kind of teases people, because you don't want to just bombard people and say, hey, I want you to come invest in my deals. You want to intrigue them so much that they ask to invest in your deals.
Great advice. No, that's really good advice. I like that a lot. You got to let them know what you're doing, right? Yeah,
right.
You do. I like you said you got to tease them, or just give them enough where they, it just intrigues them a little bit, where they want to ask more questions, right? Or they come back later.
Absolutely.
So how are you preparing for, another downturn, or, everybody talks about this, the potential downturn everybody's worried about?
Yeah. So I think, you definitely want to be cash heavy. Downturns don't really scare me all that much. Honestly, I think that as long as you're managing your properties and your portfolio correctly and you're hedging that bet, you should be positioned fine for it. To me, I don't freak out. I mean, obviously I haven't really been through a downturn yet, but that to me seems like a massive opportunity and not something to be scared of, because basically real estate goes on sale and that's a great time to buy.
That's right. So what's
heavy.
That's right. What's a way that you have recently improved your business that we could apply to ours?
Ooh, recently improved my business. Well, so one thing that I've started doing is so we've always had a newsletter. I've always just shot out, hey, here's some updates on what's going on. Here's some properties that are available. Here's, we have some investors and tenants looking for these kinds of properties. But in the next couple of weeks, we're actually starting a deal of the week, part of our newsletter, where I'm just going to go find a deal in Tennessee, underwrite it, and then send that out to all of my clients so that my investors no longer have to spend the time searching for deals or flipping through deals and then underwriting them. We've already taken that part out of it. So I think, streamlining, I guess, is really getting to the point here. Streamlining as much as I possibly can for my investors to make it so easy for them to just make a snap decision.
Nice. Can you give me an example of how you've streamlined to make it easier for them?
Yeah. So underwriting, one, and just providing them with all of that information. I think that that's really the best way of doing that. But, a lot of brokers will just send properties, say, hey, take a look at this. And to me, that doesn't really make a whole lot of sense. I mean, you got to think these investors, you're busy. And that's why, they're investing in real estate, or they have you searching for the real estate because they don't have the time to go do that. And so, by being able to provide those services that are kind of above and beyond what a typical broker would do, and actually underwriting to true specs and not just, hey, if it wasn't vacant in half the building, here's what you'd be getting. This is why you should pay X cap rate for it, which to me is just absurd.
So you're giving them more information. You're helping them to make a decision like you're talking about. That's great. Right. And so, what's one thing that's contributed to your success?
I think the fact that I just get out there and do it. To be honest with you, it's kind of all about that grit factor. I can't tell you how many people I come across, being a board member for the Real Estate Investors in Nashville. We've got over 800 members in that group. And so many people, I see them week after week, still haven't done their first deal. They still haven't put together their first cash raise. So I think that just by getting out there and doing it and not trying to read another book, listen to that next audio book, go to that next conference, just get out there and do it. I was willing to lose money on my first deal. Fortunately, we didn't. But, I was willing to lose money on that first deal just to get the experience of doing it. Because once you get that first one done, it's off to the races. It's so much easier.
And before we have to go, Tyler, how do you like to give back?
How do I like to give back? Well, this month we're raising money for Gilda's Club of Nashville. So every October I raise money for some form of cancer research. So Gilda's Club of Nashville actually provides a community for families that are going through a cancer diagnosis. So I love that. I can't wait to raise a lot of money for them this month. But also I give my time through the Real Estate Investors in Nashville. I teach other people how to invest in real estate and the benefits of investing in real estate, because plenty of people actually just don't even know what it looks like. Like, you bought your house, but here's all the tax benefits. Here's all the other, here's all the incredible ways of doing it. You can take out a HELOC. You don't have to have the cash. You can get your real estate license and roll that in as equity into a deal. There's so many different ways of doing it. So I love spending my time teaching others how to do it.
Nice. And tell the listeners how they can get in touch with you and learn more about you.
Yeah, absolutely. So the best way is definitely on Instagram at commercial_in_Nashville. You can also search Tyler Cauble. I'll pop up there. And then my website's just tylercauble.com. And you can email me through there, but 100% I will respond on Instagram. I'm much more active there.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.